traders, this is Nick giving us another update. This is the first day after the NVDA report. So the company reported an incredible quarter. They grew 100%, I believe, year over year. And the market was not that impressed. Apparently they wanted more. Instead, they chose to buy banks and healthcare. So rhyme or reason doesn't matter. Let's talk technicals. I've been a proponent of more trading than investing at these levels. And so tactical comes to mind, which means a lot of chart talk. As a trader, you'll find the next 5 minutes very useful. So pay attention and also give me your feedback in the comment section. I never lock it up. You can say whatever you want. Just be civil about it and we can discuss it. So I'm starting with the S&P SPY. I know there are a lot of squiggly marks, but those are moving averages. So focus on the candles themselves and I'll help you understand what levels we're looking at. So this is a 5-minute chart and it shows that Thursday we had a dip. So we started out red and they recovered incredibly well to where they ended up with a beautiful scoreboard, plus 0.5% on the S&P. The NASDAQ lagged a little bit, but they started out from like minus 1%, and then they recovered. So what happened today is what's been happening for the last 3 days. So yesterday, similar situation. We opened red and we climbed our way back up, except the rally was just as impressive, only the scoreboard wasn't. And guess what? The day before it, we start out red and we close strong. So you see the habit? If we look a little bit further than the last 3 days, say 5 days, we have had an accident scene from the levels of 598, give or take. And now we are clawing our way back into it. So when we're approaching it, if we look left, one would assume that this is going to be a hurdle and opportunity. The opportunity of the rally back will have to face that. And then if we break through that, then it becomes a catalyst and it shoots us up towards 607 or so. On the flip side, the bear's opportunity is to beat this week's low. So if for whatever reason we lose 582, then the downside from there could be $8 to $15. I know it's a big range, but it all depends on the momentum with which we approach it. The NASDAQ is lagging a little bit, which is pretty bizarre because the whole market rallied in May of 2023 on the premise of AI this and AI that, high tech, NVIDIA. Well, today, NVIDIA this week gave us the green flag that everything is hunky-dory. The superlatives that the CEO was using was very infectious, yet they decided to go, we shrug it off. So I don't like a market rally that is based on high tech being led by banks and healthcare. It just doesn't sound right. For now, it's just a theory or an observation, if you will. So here's the NASDAQ with the same accident scene from a few days ago, and you can see we are a little bit further away from that. And the IWM, which is the basket of 2000 stock, same as the NASDAQ. So for now, I would stay tactical. I don't think there's much need to invest at these levels. I'm fairly confident we will get lower prices. So for investors, not traders, I might want to delay the addition of new shares. See you in the live room.